Morning. Please let me know if you can hear me. You can just maybe raise your hand. You can give a reaction. Let me know if you can hear me loud and clear, please. Good morning. Good morning. Good morning. Can you hear me?
Morning. I hear
Great.
you.
Oh, great. Engineer, good morning. Thank you so
Good
much.
morning, man.
Morning. Good to
You're
have you.
welcome.
Good to have you here with us.
It's a pleasure. It's
Yes,
a
yes.
pleasure here.
Yeah.
So
All
I'm
right.
looking forward to learn more.
I'm glad. Yes, and you'll be a lot. There will be a lot to learn. So don't worry. Please just sit back and relax.
Okay.
Okay. All right.
All right.
All right, everyone. Thank you so much for joining in this morning. It's 10 o'clock already. And, as is our usual style, we like to start on time. So we're starting right now. I'd like to officially welcome everyone to the fourth edition of the SME webinar, the Business Mastery Series by Renmoney. Thank you for everyone who has joined us from month 1, month 2, month 3, and now we're at month 4. As it's a tradition, we are very interested in SMEs, all right, and everything we do is around how we can provide more for SMEs through knowledge sharing, through services, through benefits that we know that would be good and would be beneficial for SMEs all over Nigeria, all over Nigeria, specific to Nigeria. All right. So today we have a very interesting topic, right? And we have an even more interesting speaker. Cyril, I know you can hear me, and I'm glad to have you here. You joined in very early, so thank you so much for joining us. I've also made you a co-host, so you can unmute yourself, you can turn on your mics, and all of that. You can turn on your video, and you're in. All right. Cyril, can you hear me?
Thank you. Yes, I
Okay.
can hear you loud and clear.
I'm glad
Thanks.
to hear. All right. So before we get started, right? Like I said before, we're very interested in SMEs, and everything we're doing around these SME webinars is we're picking specific topics, all right, that speak to SMEs and that can better your businesses. All right. Today, like I said, we have a very, very interesting topic, right? On the understanding tax and what it means for your business and your income. Okay, and with us today is Cyril Michael, who is currently the head of tax at Renmoney. He is a tax finance and fiscal policy expert with over 13 years of experience. He began his career at KPMG Nigeria, working with multinationals, and later became head of tax at Chi Limited, formerly a subsidiary of the Coca-Cola Company. He now leads the tax function at Renmoney Microfinance Bank Limited. Okay, he's passionate about helping businesses achieve compliance while optimizing tax savings through his deep knowledge of tax laws and fiscal policy. Michael is a chartered accountant and a tax practitioner and a devoted husband and father. So, guys, you see that the person we have here is no small fry, right? He's a big fish, and even though he will not agree with me, Michael is what you are. Okay. All right. So, guys, with a virtual round of applause. Virtual. Please give Michael a round of applause for joining us this morning. Michael, we are grateful again that you could join us today, first of all. So, guys, sit back, relax, have your cup of beverage or juice or coffee or whatever it is, have it with you, and just enjoy the session, okay? If you have questions, please note your questions and you can put it in the chat box, and we will try as much as possible to, answer all your questions. We know that tax is a big deal, is a big issue in Nigeria, especially for small businesses in Nigeria, whether small or large businesses in Nigeria, right? And like I said, we're very passionate about SMEs and we want to see you grow. We are very passionate about seeing you grow. Michael Cyril, you have the floor. Thank you so much, everyone, for joining us again.
Hi, everyone. Thank you, Michelle. I'm glad to be here, and I'm glad to share a bit of all I know about taxes and SMEs. Usually, I like my sessions to be interactive, but I've been notified that we have just 1 hour to conclude this session. So just like Michelle had said, You can take down your questions or put them in the chat box. And at the end of the session, I will try to respond to your questions as much as I can. So your questions could be around this session itself or any other tax question that has been burning on your mind. I'll do my best to provide answers as much as I can. Thank you and enjoy the session. So we start understanding tax and what it means for your business and income. Next slide, please. Definitely SMEs. You're running your business, you're making money, business is going well, maybe with the usual Nigerian challenges, but you're getting by. You're not fully clear on your numbers. It's also possible that you're making money, business is going fine. However, you feel that you're not making that much money to catch the attention of the government or the tax authorities. Because of this, you don't know what you actually owe, or you probably don't care because you feel you're not making that much money yet. For some of you who try to be compliant, you are overpaying, you're not sure, but you think you are. And you don't know what risks lie ahead. So I have a quote. It's my quote. And the quote is for you. I mean, if you fall somewhere within this spectrum, ignoring tax for a business is like ignoring the elephant in the room or refusing to acknowledge the black sheep in the family. Your ignorance does not stop it from causing problems for you or your business. Now, I mean, some of us might have or know a few people that have black sheep in their family, right? There's this child, very stubborn, very recalcitrant, always bringing disgrace and embarrassment to the family, going out to foment trouble, and then they have to call family members in to clear up the mess. You are tired of this particular family member. And you know what? You just tell the rest of the family, look, this guy doesn't exist to me. I don't know him. He doesn't know me. And then you carry on. The truth is, and I mean, this is very relatable, your ignorance or your non-acknowledgement of that family member will not stop that family member from continuing the charade of embarrassment to the family, of which you are a part of. It will not make that black sheep, in quote, suddenly turn a new leaf. He will continue with what he does. It's like a bull in a china shop. If you ignore it, it will keep trashing out the shop. Definitely. Now, bringing it home to the topic, taxation. The fact that you feel that my business is not big enough yet, you know, I'm making 1 million here, 2 million there. Surely the government is not interested in that little amount. And so they're not aware. So you know what? I'll just carry on with my business, you know, like taxes do not exist. Like the NRS and the LRS and other state tax authorities do not exist. Maybe when I grow bigger, I will start being compliant. Hey, I've got the not so good news for you. It doesn't always work out that way. Maybe I could partially agree with that thought process if you have never had any dealings with the tax authorities. You've never registered for taxes. Nobody withholds on your transactions, so you don't have a tax number. Maybe partially I can agree with that thought process because sincerely, the Nigerian tax framework is not yet that sophisticated, you know, to sweep in every taxpayer into the tax net. However, if for any reason you've registered for taxes, I mean, I'm aware these days, by the time you're generating a CAC certificate, automatically you are issued a tax number, by the NRS. So if for any reason you've registered for taxes, whether with the NRS, with the LIRS, with the OGIRS, or any other state tax authority where your business functions, rest assured that the tax authorities, the government, is fully aware of your existence, is fully aware of your business and your transactions. And it only takes one committed tax official or group of tax officials to smoke you out from your hole. I'll tell you a story, real life event. Before I joined Renmoney, I used to head the tax function at Chi Limited, like it was mentioned when they were reading out my profile. Chi Limited manufactures Chivita, Hollandia, and a few other products, the gala type of sausages and the rest. And they run a model. They have distributors. Now, the model they run with these distributors is one that says, if you are able to meet a particular target in any month, in the following month, we are going to give you a discount. And with that discount, you can purchase a certain amount of product free of charge. They call it a rebate. So, for example, they set the target at 100 million for this month, and you are able to meet or exceed 100 million. You get a 20 million discount on your next purchase. So when you place an order for another 100 million worth of products next month, you are going to pay just 80 million and you'll be given 100 million worth of products. Now, the aim is that once you sell off the additional 20 million, you take that as your own revenue or your own profit, however you want to look at it. And business was going well. I mean, I'm sure these distributors will fall reasonably under the SME cadre. And business was going very well. However, at some point, the NRS or FIRS at the time decided to carry on an exercise. So they picked out inactive tax numbers on their portal. By inactive, I mean these numbers are not filing VAT returns, they are not making VAT remittances, they are not filing CIT returns, companies income tax returns, they are just redundant, inactive, and they gathered those numbers. Now, remember, when you're registering for taxes, you provide the tax authorities or with a number of information about your business. Your CAC documents you have to submit, your MEMATs, your memorandums, and articles of association, which states what you are into, the kind of business you do. You provide them with your business account number, you provide them with your place of business, your business address, and a lot of, informations are as such. Now, what the NRS did was they picked all of this information, picked the bank account number, wrote to the banks of these distributors and said to them, look, we're doing a tax fraud investigation and we require the bank statements for these accounts. And of course, everything is fair and right once there is a fraud investigation. And it's enshrined, even in the laws. So the bank obliges the tax authority, provides this information. The NRS looks through the bank statement. They see tons of transactions going on, hundreds of millions moving into the account, more hundreds of millions moving out. Oh, wow. So there's a lot of activity going on with this taxpayer. So why are they not paying any taxes? And with the information they have, they went to the business places of these distributors. So they walk in, they see a warehouse, maybe not so big, but it's booming with activities, forklifts, lifting trays of products, loading them up into trucks, offloading some other products also and storing them in the warehouse. So business is going very well, So why are these people not paying their taxes or filing their returns? And then the officials go in, ask for whoever is in charge and introduce themselves and then serve them a letter inviting them for a meeting to the tax office. Of course, at this point, you have to attend. And then these guys go to the tax office and they present all of these evidences to them and want to understand why they are not paying taxes. And of course, immediately, these guys say to them that, oh, Chi Limited is paying the taxes, the VAT on their behalf. And he said, oh, really? Okay. Get me evidence that Chi Limited is paying the taxes on your behalf. And then, of course, these requests end up on my desk. I get a barrage of requests from distributors across Nigeria, in Ogun State, in Kano, here in Lagos, making the same kind of requests. They want evidence of VAT remittances. And then I ask, evidence for what? What evidence do you want? They say, are you not paying taxes on our behalf, VAT? When you issue us your invoice, there's a VAT on the invoice, and we pay you plus the VAT. And so we expect that you're remitting, this VAT to the government on our behalf. And of course, the lecturer in me had to kick in, and I had to educate, because I knew that I could see that there's a reasonable knowledge gap on how VAT works. So I said to them, look, I am not remitting VAT on your behalf. I am mandated by law to collect VAT on my sales and to remit them to the government after taking out my input VAT, of course. And so I'm not remitting on your behalf. I'm remitting my VAT that I am liable to remit. And then I said to them, that 20 million that you get every month, what do you do with it? When you sell, don't you collect the VAT? That's your profit. That's your revenue, and you are to remit the VAT on that revenue to the government. Are you remitting the VAT on your rebate? And they say, oh, really? Are they supposed to remit? I said, yes. That is, in fact, what the NRS is asking for, because that is the revenue you make. That is the profit you make after you take products from Chi Limited. And then at that point, they raised hands in the air in despair, because some of these guys have been doing business with us for as long as 10 years. And then they are not paying any taxes. They ignored it. They felt it was unnecessary. They felt the government could never be aware of their presence. And voila, they were wrong. And now the government is fully aware, and they have come to collect every penny, plus penalty and interest. So ignoring the taxes or ignoring compliance to taxes never automatically made their responsibilities to the government disappear. It was there waiting, cooling off, accumulating interest. I mean, some of you might not be aware, but the NRS these days, they come for their liabilities, for their tax liabilities from you, the taxpayers, who is in default, plus penalty and interest. And now, this penalty or this interest are now compounded. I'm sure some of us in primary school, secondary school, they taught us simple and compound interest. So your penalties are now compounded, such that you could actually, within a period of 5 years, you may not have made more than 500 million in revenue, just saying. And then when the tax authorities come to audit you, when they are done, they give you a liability of 10 billion. And then you go, how can you give me a tax liability of 10 billion from a revenue of 500 million? Brothers and sisters, I'm here to bust your bubble. This is very possible. Very possible. Because by the time they compound the interest on the tax liability on that 500 million, which probably was maybe 100 million, it could grow up to 10 billion. So please, the best way to go about taxes is not to ignore, right? Acknowledge the existence. Try to understand how it works. Tame it. Have it under your control. Be on top of it, and you would have no problems at all whenever the taxman comes knocking. And this takes us to the next slide. How best you can understand how tax works. So I'll share a simple tax hack with you, right? And you don't need to be a tax guru. You don't need to be a tax expert to understand. In fact, this particular hack is tailored towards people who just run their businesses and want basic knowledge on how tax works, you know. And if, like the header says, if you don't gain anything from this session today and you gain this alone, I assure you, you have gained so much. You have gained so much. What is the tax hack? Follow the money. Follow the money. Look, as a matter of simplicity, wherever money is made, paid, or lost, the taxman is standing very close by. He's not too far off. I'll take that again. Wherever money is made, paid, or lost, the taxman is standing very close by. He's not too far off from you. Now, when I talk about money, I'm not just referring to cash in your hands or money in your bank accounts. No. I'm referring to a lot more. And you have things like revenue, you have things like expenses, you have things like profit, you have things like losses, you have things like gains or benefits, right? All of these things come together to refer to money in this sense, right? You're running a business, you're about to bill your send your invoice to your clients or your customers. You're about to make money. You're about to make revenue. You're trying to pay for a service that is essential to your business. You're about to incur an expense. Money is going to leave you, right, to gain that other value. At the end of the year, you're done with your accounts for the year, and when you take out your expenses from your revenue, you find out that you're going to make some profit this year. You're following the money. You need to pay attention to that point. Or let's say your expenses are higher than your revenue in a particular year. It means you're going to make losses. You also need to pay attention to that. Follow the money, right? And ask relevant questions at that point. You earn or enjoy some capital gain, some business partner of yours wills his property to you, or lets you changes the ownership of the property to your business name. That's a capital gain. Money never entered your pocket, neither the money leave your pocket, but you've made a gain. You've made a capital gain. Follow the money. The taxman is not too far off. Ask relevant questions. There could be tax implications for that gain, even if money did not come into your pocket. You enjoyed some benefits. Some of you are CEOs of your businesses, and for frugal accountability, you put yourself on a salary. You're the MD. You take some salary every month, just like the other workers. As the MD, you enjoy certain benefits. You have a company car. Your business also pays for your cook or your chef, your gardener. You're enjoying certain benefits. Some of those things may not be money in your pocket, but you're enjoying certain benefits. You should follow the money. Pay attention to this. Ask relevant questions. How would this work? Are there tax implications for this? As simple as that. And at this point, you will definitely need a tax expert if you are not so vast or knowledgeable in taxes. But you see this very question at every point money is made, paid, or lost. You would never go wrong with it. You could call up your consultant or any expert in your corner. Hey, look, I'm about to close out on this deal, and I'm going to be making some amount of money. The tax session I was in this morning says I should follow the money. And because I know I'm going to be making some money, I want to ask you, the expert, what kind of taxes would apply on this revenue? And the person says, oh, great. If you're making this money on this kind of transaction, you would be required to account for VAT. It's good you ask these questions before you make or pay the money. Sometimes if you have paid the money first or made the money first, it might be a bit late at that point. So just at the point of making the money or paying the money or making that loss, that will be the right time to ask these questions. And then your consultant or your expert says, oh, VAT would apply, or they'll withhold taxes on your end before you receive the balance and all of those. By the time you ask these questions frequently, you would begin to get a hang of it. Oh, okay, if I make this kind of income, these are the taxes to expect. At some point, you may never even need to consult the consultant, any longer. You go ahead and apply it the way it should be. Sometimes your consultant can say to you, oh, yes, you are about to make this money or you're about to enjoy this benefit. But because of the nature of this transaction, you will not be required to pay any taxes. And then you go, why? Oh, the tax laws exempt this type of income or this type of expense from taxes. Oh, really? Oh, okay. You see now, your knowledge is gradually expanding. The fact that you've made money or the fact that you're following money does not mean taxes will always crystallize at every point. There are certain transactions that are expressly exempt from taxes in the tax laws automatically, and by simply asking these questions to your consultant or to the expert in your corner, you are gradually opening up to these possibilities, to these tax savings opportunities. But don't forget, all the time, follow the money. You will never go wrong with this hack. You will never be caught unawares. You will never conclude on a transaction without being aware of the taxes. And this takes us to the next slide, because further down, I'm going to let you into certain transactions that you may already be engaging in and paying taxes on that you actually do not need to suffer taxes on. But before we move on to that, what is tax? We're talking about taxes, and that's pretty much what we'll be talking about through this session. Tax is the government's share, and this is in the simplest language possible so that we can all relate to it. Tax is the government's share of your financial activity used to fund public services and infrastructure. It shows up in 3 places: what you earn, what you spend, and when you carry out transactions. You can see here your revenue, what you earn, your profit, your gains, your benefits, what you spend, your expenses, your losses, and when you carry out transactions. Of course, this could either be what you earn or what you spend, So this is basically a summary of what taxes are and how they affect you. Now, tax savings options available to SMEs. Now, I must say this before we jump right into this. SMEs are, in our modern day and age, are a catalyst for economic development. They are a catalyst for innovation. They are a catalyst for job creation. Globally, SMEs account for about 90% of job creations globally. Bringing it home to Nigeria, SMEs account for about 96% of job creations here in Nigeria. SMEs account for about 84% of the businesses that run in Nigeria, and they contribute about 48% to the national GDP of Nigeria. So you can see that this niche is fast growing into a major force to reckon with. And even with the new tax laws that were rolled out last year and became effective on the 1st of January this year, there is a special beam that has been cast, on SMEs. We can no longer ignore the fact that SMEs are taking over, the economic space of the country, Nigeria, and the world at large. So it is very important, very essential that you, in fact, understand how taxes affect you. Because in as much as, and I must confess, the new tax laws have given certain soft landings to SMEs. It doesn't take away the fact that where SMEs are accountable to the tax authorities for various taxes, that the tax authorities will not. So we'll jump right into it. Tax savings. We'll start with value-added tax. Value-added tax, known as VAT for short, is a consumption tax, usually charged on the value added to a business or to a good, or a service that has either been supplied or rendered. Ordinarily, VAT is borne by the final consumer. And so in the past, for manufacturers, there is something called input VAT and there's something called output VAT, right? So you're a manufacturer, for instance, and you manufacture, what can I use? Let me look for something in the room. You manufacture chairs, furniture, and then you supply to your customers. In the process of doing that, you need to buy wood, you need to buy foam, you need to buy cloth for the chairs, you need to buy nails and all of those things in order to produce furniture. When you're purchasing these items, you would have suffered VAT. The VAT you suffered on those purchases are referred to as input VAT. Now, when you're done manufacturing the chairs and tables, you've added some value to the nails, to the wood, to the foam, to the chair cloth. You've added value. You've turned all of those into furniture and you've put a price tag on it. Now, you're going to add the VAT at 7.5% to the price tag you have placed on that product. And you're going to sell it to your customer. On the invoice, it will have the table, the price for the furniture, and then the VAT at the bottom at 7.5%, right? When you collect that VAT at 7.5%, that VAT is called the output VAT. Now, the government says you don't need to take all of that amount, to pay over to me. What you do, you set off your input VAT that was charged, on the purchase, and you set it off against the output VAT you suffered, or you collected from your customer rather, and whatever is left, pay it over to me. That's the VAT you are liable to. What this has done is it has ensured that VAT is only suffered on the value you have added. You suffer 10 naira in expenses to buy all the materials you used to produce the chair or the furniture. And when you're done, you're selling the furniture at 15 naira. Essentially, the profit or the value you've added is the 5 naira on top of the 10 naira. And this model ensures that you only suffer VAT on that 5 naira. That is why it has said the VAT you suffered on the 10 naira, set it up against the VAT you charged on the 15 naira and pay to me what is left. One beautiful thing is that with the new tax laws, this gesture has now been extended to service providers. Before now, service providers had no business with input or output VAT. Whatever you charge on your service, put the VAT. When you collect it, pay the whole amount to the government. But now that has changed. You can now do the same set-off from 1st of January 2026 against your invoices going forward if you are a service provider. Now, I'll tell you something, another tax savings mechanism for service providers. Usually, people who render services, they would usually have a cost element to it, right? Oh, I'm supposed to, what example do I use now? I'm trying to think. I'm supposed to construct for you a stand. Let me say a concrete stand where you want to put your water tank on it, right? It's a service. But in the course of rendering that service, I have to buy cement, I have to buy sand, I have to buy water, and all of those things. I have to buy blocks, you know, in order to construct this beautiful stand. Sometimes we don't understand how these things work. And then we just say to the customer or the client, oh, my charge for constructing the stand is 50 or 100,000 naira. And the customer says, oh, okay, it's fine. And then when you're done constructing, you send the customer an invoice of 100,000. And then you put a VAT of 7.5 on that invoice. And then the customer says, oh, I would have to withhold tax, you know, at 5% or 2% on this payment. And you said, okay, it's fine, go ahead. And they pay you the balance plus the VAT. Now, here's the tax hack. By simply constructing your invoices, you can save yourself some money, right? Both for VAT and for withholding tax. Now, you're rendering a service. You render services or the service of constructing water tank stands. That's what you do for a living. But you incur certain costs. Now, when you're issuing your invoice to your customers or your clients, you can do a breakdown, right? Yes, your service charge, your total charge is 100,000. But on that invoice, you can simply state, oh, reimbursable element, cost of cement, 20,000, cost of sand, another 20,000, cost of blocks, another 20,000, 60,000. And then at the bottom, you put there service charge, or in local parlance, workmanship, right? 40,000. And then what you have simply done is that you have shown that, look, this is the cost element of this service, and this is the value that I'm making. This is the real meat of this transaction. And what that simply does is that all taxes on that transaction will then apply solely on the 40,000. They wouldn't touch the 60,000 that you had put above, because those are reimbursable elements. You spent your money in getting those items, and you're only trying to recoup that portion of your money from your client. And so both withholding tax, VAT, would only be applied on that element, on that 40,000 element. You see, with that, you've legally saved some money. So you are not going to suffer tax on the entire 100,000 you've made. Now, VAT, there are certain VAT reliefs. I'm sure there are some of us who run businesses here who earn 100 million naira and below in a year, right? I'm sure there are some others who earn a lot more, you know, but this particular relief are for the guys who earn 100 million and below. Look, the new laws have now been made to support SMEs like you, to give you a soft landing, so to speak, to give you wings to fly, right? Now, in the new laws, it says if you earn 100 million and below in any year, you are considered a small business. And part of the relief, you are not required to file VAT returns. It is optional for you to charge VAT on your invoices to your clients or to your customers. So it is optional for you to collect VAT. However, if you decide to charge VAT to your customers, you will then be required to remit that VAT over to the tax authorities. And I'll tell you what that means for you. If you decide to take the option of charging VAT, it means you are going to be subject to a tax audit from the tax authorities, right? You're going to come and check your books to be sure that all the VAT you collected, you have indeed remitted, and you collected all the VATs that you're supposed to collect. There's no halfway through, right? You can't decide to collect from some and not collect from some others. If you've decided to follow the option of collecting VAT, you must go the long haul. You must continue all the way, and you'll be subject to an audit. You'll be required to file your returns. However, if you decide not to activate that option, and that makes life very easy for everyone. I don't make 100 million in a year, and so I've refused to activate that option. You are not required to file any VAT returns. No tax authority is going to come and audit you, for VAT compliance, because you don't fall in that bracket. Even if they ever reach out to you for an audit, you simply show to them your financial statement. Hey, in these years, I made 50 million total revenue. So this is the evidence here. So you have no business auditing me for VAT. That's how it works. Now, to the next category, you have certain items that do not, certain other items that do not attract VAT. And I will go to energy sources. We're in Nigeria. We are aware of the epileptic power supply. In fact, as I speak to you, there's a generator powering my environment. There's no light, same as most of you. And electricity is critical to most businesses. I dare say all businesses. Well, maybe exempting a few, right? And without power, without electricity, you can pretty much, some of us can pretty much not function or not render quality service. And then because you want to get power, by all means, you need to get a generator, you need to fuel it, you need to buy diesel. Some of us have gone for gas generators. Some of us have gone fully for solar, right? Just to power our businesses. And these are huge costs to the business, right? Now, in the new laws, you are not required to suffer VAT on these purchases. So not on the purchase of generators. If you purchase a generator, you will suffer VAT on it. However, if you need to buy fuel or diesel, you are not to suffer VAT on it. For some of us, the diesel company comes to supply and send us their invoice afterwards. If you ever get an invoice for diesel supply and they add the VAT to it, please feel free to call me. I mean, you can reach out to Michelle and call me, and I'll fight your cause free of charge. You shouldn't suffer any VAT on such supplies. If you decide to buy CNG, to power your gas generators, and they come to supply, to you, and they send you an invoice with VAT on it, or LPG in that case, please reach out to me. You should not suffer VAT on those. If you go solar, you call a solar person to come and install panels, to come and install the inverters, that costs a bit, and if after they're done, the company then sends you an invoice and puts VAT on it, again, call me. There should be no VAT on such invoices. So if for any reason you're thinking of going solar, this should be an incentive to encourage you to go. There are no VATs on those kind of supplies. Input VAT, I think I've done a lot to exhaust that. So I wouldn't be wasting any more time on how input VAT works. Scroll up a bit on this slide. VAT exempt items. So some goods and services do not attract VAT naturally. For some of us who are CEOs in our various SMEs, there are different businesses you engage in. The new law has now given some soft landing to some of these businesses. You run a transport services business, you deal in agricultural products, you run a farm, or even on some other products that are finished or semi-finished. You don't necessarily need to run a farm. You can also be a middleman somewhere in between. You understand? And you pick up from the farms and you go and supply to your customers. At any point in that chain, right, you do not need to suffer VAT on those agricultural produce. You have your rice, you have your cassava, you have your gari, you have your yams, your potatoes, even livestock. chickens, frozen chicken, frozen fish, what else? A number, virtually every agricultural produce you can think of, they are all exempt from VAT. So if you ever walk into a supermarket and you want to buy frozen chicken, frozen fish, and then they issue you your receipt, and then you see that somewhere in there they put VAT, call me. If you cannot fight them on your own, you shouldn't suffer that extra charge because these items are VAT exempt. They are considered basic food items and they are exempt. Now you have zero rated items. Now what happens for zero rated items? There is VAT. There is VAT on it, but the VAT is at 0%. Right? So there's VAT and it is at 0%. Now, I will explain to you the reason behind these sort of things. Now, one of the reasons is that because they are zero rated, the president has powers to automatically put a rate on those without necessarily amending the laws, without necessarily sending a bill to the House of Assembly or the House of Representatives. Okay? So he's saying to you, there's VAT on this, but for now, the VAT is 0%. So I can wake up at any time and tell you now that the VAT on this zero rated are now 5%, or is now 2%, or is now 7.5%. I don't need to send a bill, an amendment bill, to the House of Reps or to the House of Assembly before I do this. That's what it means. Another beautiful thing about this sort of zero rated items is that you can claim your input VAT against these items. Remember, the way input and output VAT works is that normally, if you suffer an input VAT, let's say using my furniture example now, furniture supply is exempt. I'm just saying it's not, but I'm just using this example. Furniture supply is exempt. However, purchase of wood, purchase of nails are liable to VAT. So what it means is that you are going to suffer VAT when you are purchasing the materials to make that furniture, which is your input VAT from my example. But when you are done manufacturing the furniture and you want to supply, you are not permitted to charge VAT because for the purpose of this example again, furniture supply is exempt. Do you know what that means? You are losing money that you cannot recoup. Okay? That money you have to expense that VAT as part of the cost of materials, production materials, for instance. Now, if the laws change and they say, oh, there is now VAT on furniture supply, but for now, it is at zero rate. What that means is that VAT you suffered, let's say, in addition to the furniture, there are other things that you supplied as well, where you suffer VAT on. What it means is that when you are supplying, in fact, let me say, it's just the furniture you are supplying, no VAT, right? So because it is zero rated, you cannot put a VAT on your invoice, but there's VAT. Or if you want to put VAT, you can put VAT at 0%. It brings you to the same point. But what that means is that VAT you suffered when you were buying the wood and the nails and all of that, it will stand as a credit for you, right? With the NRS. So now I cannot offset my VAT against this furniture supply because VAT I'm charging is at zero rate. But I don't need to expense that VAT. I will now put it as a credit. So if tomorrow I am now doing another business that requires me to charge VAT, or if tomorrow they now raise the VAT rate from 0% to 5%, you see all those credits that I've been storing, that I've been keeping, I can now use it and start clearing off all the VAT charges. And maybe for the next 6 months or 1 year or 3 years, I will not be paying any VAT, even if I'm now collecting VAT from my customers for the supply of furniture. I hope that's clear. So the kind of things that are zero rated for now are non-oil exports or even So non-oil export, some of us are in businesses of exporting. So we maybe get charcoal and we export, we get dried farm produce and we export them, okay? At the port, they are not going to charge you any VAT. You export for free. If anybody at the port puts in your bill VAT, call me. This will be a difficult fight because it's directly with the government agencies, but feel free to challenge them. And if you're unsure of where in the law, you can reach out to me or any other tax expert and they will show you exactly where in the laws these sort of non-oil exports are exempt or are liable to VAT, but at 0 rate. Now, we move from VAT to companies income tax. So I must say here that not everyone is required to file a company's income tax returns. Companies income tax returns are applicable only to incorporated entities, the corporates, right? And how do you know an incorporated entity? An entity which has been registered with the CAC as an incorporated entity. For a layman, when you see a company that has LTD behind its name or PLC behind its name, 100%, that is an incorporated entity. For non-incorporated entities or business names, you are not required. And how do you know business names? For a layman, you see companies like Bidemi and Co. or Bidemi and Sons or Michael Enterprises, or you just see their individual names, those are unincorporated entities. For those sort of entities, you don't need the company's income tax return. I mean, like the name says, company's income tax. You need to be an incorporated entity before you engage in this. How does company's income tax work? It's simple. It's the tax on your profit, right? Remember my initial position on the easiest, simplest tax hack? Follow the money, right? As an incorporated entity, this is the place where you subject your profits to tax, okay? So I've done business this year. It's been a very beautiful year. I've prepared my financial statements and I made a profit of 20 million, meaning my revenue was higher than my expenses or my cost in this particular year. Now, you are required to take that profit. I'm about to go a bit technical here. So for companies income tax, there's something called a taxable profit. So, and there's something called an accounting profit. The accounting profit is your profit before tax, so to speak, or the profit you arrived at when you were preparing your financial statements. Now, when you move that to taxes, you're required to do a few adjustments. There are certain expenses called allowable and non-allowable expenses. In other terms, you can call them tax deductible or non-tax deductible expenses. So you made provisions in your books that for taxes, for accounting, yes, is allowed. But for taxes, provisions are not allowed. So you disallow them. You add that provision back to your profit, and subject it to tax. So that is how you arrive at your taxable profit. So you then subject that taxable profit to CIT at 30%. And you also subject what we call your assessable profit to development levy at 4%. So this might be a bit too technical for us. But if you have any questions around that, please let me know. Now, again, there's something here for small businesses. Businesses that earn not more than 100 million in a year. And before I go in here, I must say something. It skipped my mind when I was talking about this for VAT. If at any point during the year you cross the 100 million margin, please note that this provision no longer applies to you. I mean, last year you made less than 100 million, maybe 60 million revenue. And then this year is looking better. Or maybe because of the general increase in cost, you've also had to raise your prices. So it's not necessary that it's looking better. But because you have now increased your prices so that you can stay profitable, it's now looking like your revenue is going to exceed 100 million. Right there in your books, the moment you see that, oh, I'm currently on a 95 million revenue position, and we're in May, so automatically you know that before December you are going to cross 100 million. The moment you cross 100 million, brothers and sisters, you have to start accounting for VAT. You have to start charging your customers and your clients for VAT. But you need to be meticulous to be able to draw the line such that when the tax authorities come, okay, and they say, oh, you made 150 million, you only paid tax on 60 million or on 50 million, you can then be able to explain to them that before this time in the year, I was not up to the 100 million margin. And you need to show them evidence that last year you didn't cross the margin. So please don't think that, oh, you made 150 million last year, and then you say that a tax expert says you will be monitoring it this year. Once you cross, you can now account. No, once you have exceeded the 100 million margin in a prior year or last year, for instance, you do not fall under this category. Okay? The way this works is that from the beginning of this year, please start accounting for your VAT. This only applies to people who have never crossed the 100 million margin. They are required to monitor every year. Now, if you have been crossing 100 million in the past, and this year business was not so good, or you had to focus attention on some other things, and you realize that at the end of the year, you ended up not crossing that 100 million margin, automatically you are falling back into the category of a small business. But you have remitted VAT already because you would ordinarily exceed 100 million. Now you can now apply, either for a refund or a credit, right? Because now at the end of the year, you found out that you shouldn't have even been remitting that VAT in the first place, and so you can apply for a refund or a credit. Now take note, when you apply for a refund or a credit, the tax authorities are going to come. They're going to try to do a review, a spot check, an audit to be sure that you are really entitled to that refund. In this case, there's nothing to fear to the extent that you have not done any form of creative accounting, right? So now for businesses who are 100 million and below, right, you are not liable to company's income tax. Okay? You are not liable. You are required to file your CIT returns, but you are not liable to company's income tax. For other businesses who exceed 100 million, however, in a particular year, you made a loss, right? In the old law, you will be required to remit what we call minimum tax in the old law. In the new law, they've changed it to something called the effective tax rate. But here's the catch. For you to now be liable to effective tax rate, you must either belong to a group that has a group revenue of 750 million euros in a year. Or if you don't belong to any group, you as an individual business must have made up to 50 billion in revenue in that year. That then moves you to pay what we call effective tax rate. An effective tax you will now be required to pay. However, if you fall below these two scenarios, you do not belong to a group of companies that earn 750 million euros, even individually as a business that doesn't belong to a group, you never recorded 50 billion revenue in that year, you automatically become exempt even from effective tax rate as an SME. Okay? You will then only be liable to what is called a development levy at 4%. Now, listen, for companies income tax, in this new law, you are permitted to set off brought forward. Let's say in your business, you have this new law says your brought forward losses against your current year's profit. So I've made losses, and my carried forward losses up to this point is say 100 million. But however, this year business has been good. I made a profit of 30 million, but I have a brought forward loss of 100 million. You are permitted to set off, to wipe away that 30 million profit you made this year, right, with the 100 million loss. Now you will now be in a 70 million loss carried forward position. So automatically you are exempt from CIT. I've enumerated earlier, you are also exempt from ETR. Okay, so this is something you need to pay attention to as well as a tax savings mechanism. Now we move on to stamp duties. There are also some reliefs here. Certain government related documents are exempt from stamp duty. Certain shares, certain government bonds, and all of those, if you trade in them, you are exempt from stamp duty on this. If you are taking a lower value mortgage, that is below 100 million, you also get to enjoy certain relief from stamp duties. Stamp duties is divided into two. Initially, it used to be stamp duties and electronic money transfer levy, right? However, in this new law, they have now, renamed electronic transfer levy to stamp duties as well, right? So you have stamp duties on instruments, right? On certain agreements and all that, and you also have stamp duties on transfers, electronic money transfers, the 50 naira that you are currently being charged, right? So the stamp duties referred to here, to a large extent, are the stamp duties on instruments or, on documents. You get to enjoy this relief on those. For the electronic money transfer levy, if you transfer less than 10,000, you get to enjoy a savings on that. I don't know whether that applies to you. You can use that for your individual, transactions. Next slide, please. I've been told I need to move faster. Withholding tax. All right. So I'm sure most of us know what withholding tax is referred to. Withholding taxes are taxes incurred usually on expenses. Before you make a payment, you're required to withhold a certain amount from that payment and remit it. Withholding tax is more or less an advance payment of company's income tax, because when you withhold tax from your supplier before you make that payment to him, once you remit that tax to the tax authority with that supplier's tax number, that amount you have remitted will reflect for that supplier as a tax credit. And that supplier can then use that tax credit to offset his or her company's income tax in the future. Okay? So this is essentially how withholding tax works. And I've explained how you can reduce your withholding tax in the event that you are the supplier in this case. If you are rendering a service, please, this applies mainly to services. You can structure it, put a reimbursement element and put a service charge, and the withholding tax will not apply on the entire invoice amount. It will only apply to the service charge. If you are supplying products, unfortunately, this will most likely not apply to you. Somebody cannot sell a car to your company, and then, or you are a car supplier, and then you supply cars, and then you tell in your invoice, you put cost of car where you purchased it, 100 million. Cost of clearance, 10 million. Total reimbursable element, 110. Service charge or profit element, 10 million. Total invoice amount, 120. It doesn't work that way. For a supply, please, VAT will apply on the entire invoice amount. So now, right, there's something called a double tax treaty agreement. So double tax treaty is a gentleman's agreement between two countries where they have put certain rules together to make their trade or trade between individuals in those countries become seamless or easier. Now, DTT between two countries are some of the very few agreements that can stand above the tax laws of each of those countries. By above, I mean if in a DTT between Nigeria and China, for instance, whether your business you import from China or you export to China, or you exchange services in the course of rendering your business, if ordinarily the transactions between all imports, you are supposed to charge VAT at the port, at 7.5%. I'm just using it as an example. But in our double tax treaty agreement between Nigeria and China, they state in that agreement that all imports from Nigeria to China, right? All exports from Nigeria to China or imports from China to Nigeria will not suffer any VAT at the port. Automatically, that DTT agreement will stand above the tax laws of either countries. So even when that your good, that your product arrives at the port of China and they see that this is coming from Nigeria, what will guide the transactions would be the double tax treaty agreement. Okay? So, and if it says in that agreement that there will be no taxes, then there will be no taxes, regardless of what the tax laws have said, about those transactions. So you might want to take note of this. Next slide, please. Non-resident taxation. Yes, this should be the final slide before taking questions. Now, for some of us here, in the course of our businesses, we might be enjoying certain services from people who sit remotely outside Nigeria, right? Ordinarily, in rendering those services, taxes should ordinarily apply. VAT at 7.5%, withholding tax at 10% should apply on those services. However, there's something in the new tax laws that says if these people that provide these services, if you make payments to these people that provide these services under a contract of employment, that is a Nigerian company sitting in Nigeria makes payments for services that they enjoy from people sitting offshore under a contract of employment, automatically that payment will not be liable to any tax in the hands of that Nigerian company. So it means that if you are currently enjoying those kind of services as a tax avoidance mechanism, you can immediately change your contract from a contract of service with that person to a contract of employment. And once you're able to do that, all payments going forward will not be liable to tax. Most people are not aware of this, so take note of this, and I can expatiate further, subsequently offline if you need further guidance. This brings us to the end of my session, and I am ready to take any questions you would have at this point.
Michael Cyril, you are indeed a lecturer. Indeed. And I think that we would pass because you have done a great job at explaining it bit by bit with your stories and your insights. So first of all, we are very thankful and we're grateful for this, okay? Guys,
Thank you.
just as you were talking, there were a lot of questions. People were already asking questions. So it means that, people are really interested, right? People are not dropping off. People are not going to fry akara and cook beans. People are still in the meeting. So thank you so much. Thank you so much for joining. Thank you so much for joining for this. We are indeed very grateful. All right, guys. So there are a couple of questions that people have asked. Anthony, I see you, but please hold on because a lot of people have asked questions. And so, Cyril, you have You have 30 seconds to answer each question. All right. Do
I'll
you
try.
agree? Say you agree.
I agree.
Great.
I agree.
All right.
I hope
Okay.
I hope I don't go off lecturing while trying to answer.
Okay. So someone asked a question. For a newly registered business that is still building a factory, but has not yet started operations or generating revenue, but currently at the capital investment or startup phase where you are still building. So there's no income, right? How do you pay tax on zero revenue? Or does the NRS give us time to build? Basically, what's the tax implication for any business at this stage?
Oh, great question. So, in the laws, there's something called pre-operational expenses, right? So these are the costs that you incur while you are still setting up your business. Okay. And there's a place for that because essentially you have not started. So these are basically setup costs. So you can decide, I mean, if unfortunately in incurring some of those costs, you have to purchase materials, purchase building items and all that, possibly they would deduct taxes, from you because they are supplying you. They are not interested in knowing whether you started or not. This is a purchase, right? So what you can do, you can, take note of those expenses. Okay. I expect that you would have registered for taxes, but you have not commenced operations yet. So they can remit those taxes under your tax number and you keep them. They will be kept for you such that when you eventually commence, you can then start using those credit notes to offset taxes for when you have now commenced operations. But yes, to answer your questions directly, there's a possibility that you will suffer taxes on pre-operational expenses when you are purchasing those items to set up your business.
Okay.
There is also a place to bring those expenses in when you are preparing your company's income tax returns. Those expenses could also come in as assets, on which you can claim capital allowances when you have now commenced your business. Let me hold myself here.
Yes,
So I
please.
stay within 30 seconds.
All right, thank you so much. We have a lot of questions, so we're going to try to see what we can do up until 11:15. Okay. Are there certain goods that are VAT exempt? For instance, if I produce bottled water, do I charge VAT to my customers? I know that somebody also asked, are there certain businesses that are VAT exempt? So are there certain goods that are VAT exempt? Are there certain businesses that are VAT exempt? Yeah.
Oh, yes. For goods, there are a lot of goods that are VAT exempt. To answer your question directly, for water is exempt from VAT, whether bottled or whatever, right?
Okay.
There are many goods, I touched on it, agricultural products,
Yeah.
whatever it is, educational products. For agricultural products or most of the exempt items, to the extent that you have not added any value to it, right? How do I explain it? So you are taking chicken, for instance, you've only killed the chickens and frozen them, so it's frozen chicken, it is exempt, But when you are trying to manufacture another product in which you have shredded chicken or shredded beef or something, you have now processed it. There's now some value added. So on that new product, VAT will now apply, right? But in your basic product, there are a lot. I mean, if there's a space for subsequently, I can share you a comprehensive list of all the items or products that are exempt. For businesses, yes, I touched on it. If your business is less than, 100 million,
100
you are
million.
exempt.
Yes.
Yes. And then if in your business, you solely deal with agricultural products, right? Without any processing, you run a farm or stuff. Yes, that business also is exempt. Educational products, like I said, are also exempt. Books, you sell books, you sell educational materials, those are also exempt. Yes.
Okay. Thank you so much. Thank you so much. Next question would be please hold. Okay, so remember when you spoke about breaking down your invoice, right? So there are certain services, certain things that you have incurred, and then you have your service charge or your workmanship, and then you VAT on that, VAT on that. Someone else says that if I've not been doing that separation, is it too late to correct the situation? Interesting question.
Well, yeah, very interesting. sorry to bust your bubble, right? Money that has gone has gone.
Has gone.
Except you
Yeah,
want to then go back to begin to doctor those documents, and that will be unethical.
Yeah.
Right? That would be unethical for you to then go back and start adjusting or reproducing those documents. So the best bet, I mean, if you had not started earlier on, the best bet is to start from today. Okay? Right? And one other thing before I drop off on this question, try as much as possible to also keep those reimbursable documents, right? The receipt you received when you were buying those materials to render those services, try and keep them, because in certain instances, when the reimbursement become too high, the tax authority might then ask for evidence that you
Evidence. So it
suffered
doesn't look like
those costs.
you're trying
So it
to
doesn't look like you are doctoring them as well. Yes. So
exactly.
keep the
Yeah.
receipts, keep the invoices, in the event of a tax audit. Thank you.
All right, thank you so much. Are tax-exempt businesses still required to register with tax authority even if they won't pay? Sorry, this is a quick
Take
question.
that again.
Are tax-exempt businesses still required to register with tax authority even if they would not pay?
Yes, you are required. I mean, the tides can turn tomorrow, so you need to register.
Okay. So somebody remember your example about supermarket and then putting a VAT on your receipts. How do we challenge supermarkets at the point of payment?
Look, you can do it. Let me. I don't want to tell stories. Jeez.
No story.
Wait, 1 second. Let me give you an example. So, in the company I worked for before, we also run supermarkets. The cheese stores.
Cheese
right?
stores, yes.
Good. Do you know that we got a petition from this Lagos State? I can't remember the full name now. Lagos State customers something, right? And I went there. You know what happened? A lady came to make purchases, and she claimed that we wrongly charged her VAT, right?
Wow.
Of course, if you challenge at that point, they may not refund you at that point. They will tell you this is company's policy. You know what? Go to the customer protection. There's one in Lagos State, know, and they invited us. And we had to come. Yes, they presented all the documents. I had to defend, for where we were wrong, we accepted. Where we were not, we said, no, this is liable. Here's the law. We are to charge, So you never know. Tell them politely. Most likely they will not refund you there. And you can take it up, go to the customer protection and they will summon them. So yes, that's the way you can do it.
All right. There are a lot of questions, guys. A lot of questions. So I'm going to try to pick. And then what we can do is we would isolate these questions that you have asked, right? And then we'll answer them. You'll see them on our social media stories. And we would also have it in our WhatsApp community. So Cyril will do us the honor of, responding to these questions, and we can have them as, snippets so that you all can see the answers. All right. Somebody asks, what kind of tax is limited liability companies supposed to pay?
Story time again. Okay.
No story, Cyril. Promise me no story.
Okay. So there are a list of taxes, right? To a large extent, the only tax that an incorporated entity is to pay that a non-incorporated entity should not pay will be the company's income tax. And I touched on that during my session, right? But now for the other taxes, they are pretty much supposed to pay. However, the only dynamic or the only difference in that case is who are you to pay those taxes to? So you have withholding tax, you have, withholding tax, you have VAT, right? You have consumption tax, you have payee, right? So for both entities, you have to pay payee to the extent that you have employees. Pay them to the state where those employees are resident, right? For withholding tax, if you are an unincorporated entity, whatever withholding tax you collect from payments to your suppliers, you have to pay it to the state tax authority where your business is situated, right? For capital gains tax, for instance, also, if you have collected it from an incorporated entity, you have to pay to the FIRS. If you have collected it from an unincorporated entity, you have to pay to the state tax authority where your business is resident. The same for stamp duties, not the EMTL. For stamp duties, if you have collected it from an incorporated entity, you have to pay that stamp duty to the NRS. If it's from an unincorporated entity, you have to pay it to the state tax authority where your business is resident. So these are the dynamics, But for VAT is uniform. You collect from incorporated or unincorporated, you must pay it to the NRS. This is the
NRS.
much I can do within the little time frame. Yeah.
Yes. Somebody says a business owner who pays their own salary. I know that there are two questions. Somebody asked this question as well. I'm a business owner, I pay my salary from my business. How do I do taxation?
Okay, great. So when you pay yourself your salary from your business, you are liable to what is called personal income tax, right? You can do that on your own. There is a table. In fact, if you go online, just Google the tax, what's the word now? The tax committee, tax table or something. It shows the table that you can plug in your salary, your gross salary, and it will calculate your tax. And you are to take that, go to the LIRS portal, register your business on the LIRS portal, and through that, you remit that tax. They will generate something like a remitter thing, which you take to the bank, and then you have your tax paid. That's the way to do it.
All
Also
right, there are
for your
many
other
more questions,
employees.
but I'm going to give Anthony a chance. Anthony, you have 30 seconds, maybe 10, to ask your question. Anthony, can you hear me?
Yes, I can hear you, ma'am.
Fantastic. Okay, can you please ask your question? Quickly, please.
Okay. I have hello, sir. Mr. Cyril, thank you for how far you've gone with the training. It's really interesting. You've really been imparting much to us. My first question is not new, but I want to plead, sir. Like me, I'm really lacking with regards to tax. I am an SME and a startup entrepreneur with the company called Skies Corporation. I'm an IT engineer, and it's an IT firm here in Abuja. So please, what I want to plead, sir, aside this meeting now, is there any platform where we can meet with you and learn more, either virtually or physically, to learn more about the tax? Because I really want to know what it has to do with tax fully.
Okay. Platform, not really. I'm in my little corner, but there's something I can do, right?
Okay, you know what?
At my spare time. Okay,
okay,
go ahead.
So let's not put Cyril in a tight spot, Anthony. Okay. So we have a WhatsApp community, Anthony. I don't know if you're a part of the WhatsApp community. So we have a WhatsApp community. And like I said before, some of the questions that you have asked, we would also, attempt to answer all of the questions in the WhatsApp community. And then if you have more questions, you can put them up there as well. And then we can share with Cyril, and then he can also help with that. So like you said, you're a startup, you're an SME, you don't know exactly what to do. Cyril can do like maybe 1, 2, 3 minutes voice notes on how to go about it, and we can share that with you on the WhatsApp community. So if you're not a part of the WhatsApp community, guys, you should be a part of it. I know that a member of the team would share the link with you at the moment right now, and then you can join in on that. Okay, Cyril, there are a lot of questions. I'm not going to keep asking, so I don't want us to go beyond our time, right? But I wanted to also quickly mention to everyone, I know that at the last meeting, someone mentioned, and then you must have been seeing our ads on the Renmoney business, right? We're trying to really expand, and we're trying to, have everybody in on Renmoney, right? On the Renmoney business, and that's what it's called. So I know that there was a link shared where there's like a waiting list, right, with a couple of benefits. So guys, that is still on, all right? It's still on, no worries about it. For existing customers, they'll get access in the month of May. And I got this information directly from the head of the business. All right. And then for June, the guys who joined the wait list would also be invited. All right. So guys, keep joining, keep registering. And what we would also do right now is to have the link up in the chat box, so you can copy that. Like I said before, it's for everyone. So renmoneybusiness.com. All right. You can join, register, and then join the wait list, and we all will have access. All right. And then other information will be shared with you as you join in, you share your details with us. All right, guys, it's been an interesting session. I think month in, month out, it keeps getting better, keep getting more interesting. So guys, if you didn't join in on time, I'm glad that we have a recording to share with you. We would also share a link to the slides that Michael Cyril took us through. All right, Michael Cyril, thank you. We are very grateful. It was a great session. Now we see another part of you. Right, guys. Also, one more thing, we'll be having a physical session the last Saturday in the month of May. and then there'll be more information sent out. We cannot have everybody in, all right, but what we can do is if you register on time, you get access to join physically. And then for those who cannot join in, for those who are in Abuja, Canada, South Africa, Kano, Benue, Benin, Cotonou, wherever you are, you can join in virtually in that session. Guys, it's been an amazing time. And I'm thankful for everyone who has joined in today, whether you joined in early or not. Thank you so much. Like I said before, the recordings will be shared with you. The slides would also be shared with you almost immediately after this session. Cyril, thank you so much. We see you on Monday, right? All right, guys. Thank you so much. And
Thanks,
enjoy
everyone.
the rest of your weekend. Bye for now, everyone. Bye for now.
Bye-bye.